Gold just plunged below $4,000 an ounce. Most retail investors think gold only goes up during times of massive geopolitical stress. But right now, the exact opposite is happening. A massive structural shift in global macro is unfolding today. Oil prices are crashing hard. Massive diplomatic moves are rewriting the rules of the global shipping lanes. If you are sitting in cash, you are missing out. If you are trading the wrong sectors, you are getting crushed. Today, we are breaking down the exact numbers you need to rebuild your portfolio. The biggest story today is the absolute liquidation in the commodities market. Brent crude dropped a massive 4% down to $74 a barrel. West Texas Intermediate followed it straight down, breaking below $71. What most people don't know is why this is happening so fast. The United States and Iran are actively negotiating an end to their recent conflict. Tankers are already turning their satellite signals back on in the Strait of Hormuz. This means the massive geopolitical risk premium is evaporating in real time. For traders, this is a clear short trigger for major oil producers. Giants like ExxonMobil and Chevron both slid nearly 3% today. If you want to trade this, look at shorting the energy tracking funds. Or look at buying companies that consume massive amounts of fuel. Airlines and transport companies are getting a massive unpriced margin expansion right now. But before you skip to the end, look at what this oil crash did to precious metals. Gold fell 2.9% today. It officially broke below the critical psychological floor of $4,000 an ounce. Earlier this year, gold was trading way up above $5,000. This massive drop is happening because the panic is leaving the market. When anxiety eases, big institutional funds dump gold and chase yield elsewhere. But the surprising part comes next. Silver fell even harder, plunging 4% in a single session. Major miners like Newmont slid 3% as a result. If gold holds below 4,000, the next stop could be a swift drop to 3,800. This provides a great entry for a macro short position using gold futures. You can also use inverse gold exchange traded funds to capture this downside. This commodity flush completely altered the landscape for government bonds and treasuries today. The yield on the US 10-year Treasury dropped sharply. It fell from 4.50% down to 4.40%. This is a massive one-day move for the fixed income world. The 2-year Treasury yield also eased slightly down to 4.15%. Lower yields mean bond prices are moving up. This happens because falling oil prices lower the near-term inflation outlook. The market is breathing a sigh of relief. But the Federal Reserve is still sounding incredibly hawkish behind closed doors. They are still threatening another interest rate hike before the year ends. This creates a massive friction point. If you want to make a highly predictable trade here, look at the spread. The gap between the 2-year and 10-year yield is shifting. Trading the yield curve steepener is the institutional play of the week. Now, if you are finding this breakdown useful, hit that subscribe button right now. We track these massive macro shifts every single day to give you actionable ideas. Don't miss tomorrow's update. Let's look at how this macro environment is completely reshaping the US equity market. The S&P 500 managed a 0.6% rebound today. The Nasdaq Composite rose 0.7%. This comes after a brutal 2-day tech sell-off where chip stocks got completely annihilated. The Philadelphia Semiconductor Index tumbled nearly 8% yesterday. Today, tech saw a very fragile, mixed recovery. Nvidia ticked up just 0.5% after a massive 4% drop. Micron Technology actually fell another 0.8% today. Investors are incredibly nervous ahead of Micron's earnings release. What most people don't know is that tech volatility is rising much faster than broad market volatility. This means big funds are actively hedging against a massive technology-led shakeout. The real actionable alpha today was actually outside of the technology sector. A massive rotation is happening right under your nose. The biggest winners today were the US homebuilders. The government just approved massive new legislation highly beneficial to the housing industry. Because of this, KB Home stock absolutely surged 16.8% today. D.R. Horton jumped an incredible 7.3%. This is where the real money is moving. While retail traders are bag-holding tech, institutions are buying housing. Furthermore, Alphabet rose over 1% today on major news. It will officially replace Verizon in the Dow Jones Industrial Average on Monday. Alphabet's high share price will give it immense influence over the index. This creates a clear trading strategy. Go long Alphabet and short Verizon to play the structural index rebalancing. The surprising part comes next when we look over at Europe and the UK. European equity markets stayed incredibly steady overnight. They managed to avoid the worst of the American semiconductor rout. But the UK market is facing its own unique set of problems. The Bank of Canada just shrugged off a surprise economic decline in their first quarter. This central bank resilience is echoing through the UK and European central banking halls. Rate cuts are being pushed further out into the future. Higher interest rates for longer will continue to crush highly leveraged companies. Watch out for what happened today on the next video. We will see exactly how the Micron earnings report shakes the global market tonight. For now, go watch our deep dive on trading the yield curve right here.